Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Vivakor Inc.'s latest filing, and let me tell you, it's a bit like a roller coaster. We'll see them taking on some serious debt and getting a warning from Nasdaq. Buckle up. This is a Form 8K, a current report that companies file to announce major events. The date of the earliest event reported here is March 18, 2025, so this is what happened recently. The big news here is that Vivakor entered into a loan and security agreement, meaning they borrowed money. They issued something called a junior secured convertible promissory note to JJ Astor & Co. Think of it as a fancy IOU with some strings attached. The principal amount, or the amount they borrowed, is $625,000, but they only received $5,000 up front. The rest probably went to fees. This loan is intended for general working capital purposes, that is, for them to run the business, pay the bills, and to repay some existing debt. They got the money in mid-March. Here's how they're going to pay it back. The company will pay the lender over 42 equal weekly installments of $157,739. If they do not have enough money, they can use company stock. The note does not bear interest unless an event of default shall occur and is continuing. That means if they mess up the payments, interest kicks in. Vivakor also set aside 21,554,274 shares of its common stock for possible conversion under this note. It is a lot. Also, they're giving the lender 250,000 shares as a little thank you for the loan. To add more complexity, there's a registration rights agreement, or RA. This basically means Vivakor needs to register the shares related to the loan with the SEC so they can be freely traded. They have about 2 months to do it. Now, let's switch gears to another issue. Vivakor received a notice from Nasdaq because their stock price has been below $1.00 per share for too long. This is not good news. They have until September 15, 2025 to get their stock price back up above $1.00 for at least 10 consecutive business days. If not, they risk being delisted from Nasdaq, which can make it harder to attract investors. Vivakor says they're monitoring the situation and will consider options to fix it. But this is a serious concern for investors. Finally, the company disclosed that they issued the note and the commitment shares, and they believe these issuances were exempt from registration because they were made to an executive officer who knows the company well. Basically, they didn't have to jump through all the regulatory hoops because of who they sold the securities to. Unfortunately, there is no financial data in this document. To keyed. Now let's step back and analyze what all of this means. Vivakor is clearly facing some challenges. They're taking on debt, which can be a risky move, especially for a company that's already struggling with its stock price. The Nasdaq warning is a big red flag. It suggests that investors are losing confidence in the company. While the company has until September to fix this situation, it's not a guarantee. On the other hand, the company believes that taking on debt will help them improve working capital. It remains to be seen if that is the case. Overall, Vivakor's direction seems uncertain. They have potential, but they also face significant risks. Investors should proceed with caution and carefully consider all the factors before making any decisions. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings. Until next time.